In this video, we'll find out everything that happened with GameStop, why you should worry, and where the price is heading. Cue the 3-second intro. Okay, so the first thing is that GameStop is your everyday brick and mortar company. It sells video games, it sells consoles and accessories, and basically it's one of the old school ways of selling games. And so last year, it was one of the victims that was hit really hard by COVID-19. And if you look back, you'll see that the share price was trading at $4. And since then, the fundamentals have been horrible, including today. So not only is it facing internal issues, it's also competing with major gaming companies that have decided to go online and sell their games through downloadable links. So basically, GameStop is the Kodak when digital cameras came about, or Blockbusters when people started to turn to Netflix. GameStop just didn't have the speed to evolve, they didn't move online, and they were suffering from heavy losses, and so they decided to close stores. So what happens now are that these shrubbery hedge fund companies come in like Melvin Capital and Citron, and they thought that it is now a perfect opportunity to short the hell out of these shares in the hopes that the price would drop where they would profit. And then a month ago, the hedge funds shorted the shares at around $15 in the hopes that the price would continue to drop. But I'm sure they regret now their decision, because you shouldn't fuck with the underdogs. So before I continue, I just want to give you a little bit of an idea of what short selling is about, so that you have an idea of what happened with GameStop. Most investors follow the buy low, sell high approach. This is where you buy a certain number of shares at a low price, and then you have the expectation that it will rise, where you'll sell it at a higher price for a profit. Well, short selling is the complete opposite practice. It is where you sell high and then you buy low and you profit. So how this works is that when you short sell, you'll borrow a certain number of shares from a broker, and then you'll sell it to them into the stock market at a low price. You'll then bet and wait for the share price to fall even lower, where you'll rebuy the shares back, return the shares to the broker, and hopefully pocket the profit. But as you know, with GameStop, the opposite happened. Take a look here. So here's the danger that comes with short selling. And that is, what if you sell high and borrow the shares from the broker, and then the share decides to just rocket? Now you'll have to lock in a loss, buy the shares back at a higher price than what you sold it at, and then problem. Okay, so there's two dangers with shorting. The first thing is that there's unlimited potential of losses. So when you buy shares, the lowest price it can go is 0. And when you short shares, the share can go up hundreds of percents, thousands of percents, and even more. So this means that your loss potential is unlimited when it comes to shorting compared to going long or buying shares. The second danger, which not many people think about, is that there are a limited number of shares. And this is a major problem when it comes to short selling, because we know that the major hedge fund managers have taken on massive short selling positions. So many that they sold more shares than were actually available with GameStop. And so now they have to cover a bunch of their short positions, and they've taken their losses. But what about the rest of the shares that they can't buy back? Because there are just not enough shares. Well, the thing is, now they're incurring billions of dollars of losses that they are actually asking governments for a bailout, including Melvin Capital, who've asked for a $3 billion bailout. And that's why worldwide, many brokers have stopped allowing traders to short sell GameStop, not only to protect their asses, but also because there aren't any more shares to short. And now, worldwide, hedge fund managers can only wait and hope that the share price will drop, where they can hopefully salvage some of the losses that they've incurred. But now let's go back to the question that I'm sure you're dying to know, and that is, how the heck does a company like GameStop rally over 1,900% in under 1 month? According to the media and news, social media and demand led to the insane rise. So after they heard that the hedge funds decided to short sell GameStop, the traders on Reddit decided to go against the hedge funds and just buy. In fact, in a subreddit forum called Wall Street Bets, or WSB, with over 3.5 million members and now over 5 million members, run by Deep Fucking Value, said that the share price is undervalued. Now, this subreddit forum is also known as the 4chan with the Bloomberg terminal. And basically, they have a huge number of people who like to gamble on the markets. They have their own ways of thinking and culture and thoughts and their own way of perceiving value. They are even known as the degenerates. And so with GameStop, they managed to convince each other to buy GameStop stocks and call options and just go against the big hedge fund managers, go against smart money. And this frenzy created a sheep-like strategy where everyone just bought more shares. And take a look here at some of these comments at what type of Reddit buyers there were. Okay, so now that there is this mass buying taking place without looking at the company's fundamentals, without looking at the micro and macro aspects, you know what happens. The share price will continue to pump and the short sellers will get squeezed out of their positions, including hedge funds, which is what happened. And that's why this is known as a short squeeze. And worse yet is every short seller who shorted more shares than actually exist, they wouldn't be able to close their position, cover their losses, because the extra shares don't exist. And now the Redditors on WSB and many other traders and investors are holding onto their stocks because they are not willing to let go. So is this legal? And basically, who is going to jail? So right now, everything is under investigation. We don't know the full details, okay? But I can tell you, any hedge fund managers and traders are going to go bankrupt. And when it comes to WSB, I don't think that they're manipulating the market, as they are all posting publicly without any form of inside information, but we are still yet to find out whether there was some form of illegal collusion practices. They are doing what bettors and gamblers and traders do all day and every day, speculating and betting on potential moves. But there is a bigger issue that's lurking when the dust settles, and that is this has set now a precedent for the next rubbish company to rocket over 1,000% because a social community hates smart money and they hate the big boys. So they want to now get back into this community, bet against the big companies rather than basing their buy or sell decisions on the underlying value of the company's fundamentals. And if this is all legal, then I hope that hedge fund managers, brokers, and market makers are going to consider very serious security measures to put in place to protect not only themselves, but also their clients' portfolios as well. They need either circuit breakers, safer application. They need other insurance policies to avoid bankruptcies in the future. But let's save that for another conversation. Right now, I'm sure you're wondering, what am I doing with GameStop and did I get in? So let's take a look at this chart right over here. And today is the 28th of January, early in the morning. So here it is. So in the daily chart, what you can see is that in one day, the market price gapped, basically jumped a level from $150 up to $354. This means if you were a short seller and you placed your stop loss between 151 and 353, it would have jumped past that, leaving you in your position at a huge loss. And so if you did manage to get out, let's hope you didn't have a big position to begin with because it's relative to your portfolio. Going back to the analysis, normally when a share gaps up based on no real fundamental news or company related information, there is an extremely good chance that the price will come down just as fast. And in my years of trading, I've seen my own statistical analysis that over 75% chance of gaps close. And if this is the case, then GameStop could drop in price quite quickly back to the $150 mark. And this could happen in a form of a bubble. This could happen in a form of another gap. This is where investors will start selling their positions, which will get into a panic selling frenzy, which will cause a fast and furious drop in price. And as traders, we can't really do anything because, first of all, most brokers have cut the option to short. Second of all, I don't like gambling or betting based on price or sheep mentality. I prefer to follow my strict and consistent trading strategy because one trade will not make you rich. Many trades will make you rich over a longer period of time, and trading is a forever business, okay? So I would like to conclude this video with 5 main warnings. The first thing is that a stop loss is a must. Always set your stop loss, or ideally a guaranteed stop loss, with your trade. The second warning is just forget about hindsight. Never look at hindsight when trading these occurrences because they are extremely rare to find and they almost never happen at the same way that it happened previously. Third warning is risk less. Make sure you manage your risk position very carefully and only deposit a tiny percentage of your portfolio in case the worst case scenario situations occur. The fourth warning is that short sell only top companies. I only short sell companies that are blue chip companies that are not near bankruptcy. And this way there's a better chance that the market price won't jump up or down with erratic percentages. The fifth warning is just don't follow the crowd. Follow your own proven trading strategy. Don't get sucked into this buying or selling based on what other people tell you to do or communities, because more often than not, and I'm talking 98% of the time, you're going to lose. So follow your strategy, find what works, and then move ahead it. If you found this video helpful, let me know in the comments, or you can email me at info@timonandmatti.com and head over to my website at timonandmatti.com.